Hey, what's up? This is Greg. Welcome to the channel. On this channel, we talk about markets, investment, and business, not necessarily in that order. And on this video, we're going to be talking about one of my favorite subjects, and it's how to play the energy market. Now, if you've been watching this channel, or even if you're new to the channel, we have been talking about for months and months and months about the energy markets and about ways to play the reopening of the economy and the recovery. And that's what we're going to be talking about in a little bit more detail on this video. But before we get started, if you find this video valuable, please like, helps me out a tremendous amount, and also subscribe so you can, be on board for future presentations. And I try to publish at least twice a week, and we talk about all kinds of very interesting topics related to markets, business, and investment. So without further ado, let's get right into it. Okay, now there's a number of ways, obvious ways and not so obvious ways, that you can play the energy business. And when I say the energy business, I'm talking about the real energy business, okay? The energy business that's 90 to 95% of how we get energy in this country, and that is related to oil and gas, okay? I'm not going to talk about the alternative energy business in this particular video, and the reason is that while I recognize that a lot of people have made a lot of money in alternative energy over the last couple of years because it's kind of a fad, and it's something that the politicians are trying to convince you that, it's going to take over oil and gas like in a week. It's not going to, and I particularly don't like that business because it relies on government subsidies. Historically, and I've even had some experience with this, you might recall in past videos I talked about when I worked on Wall Street, I actually financed alternative energy projects, and I in fact financed the largest solar energy project in the world at that time in the Mojave Desert. So I know a little bit about the subject, but the only reason that solar and wind exist along with electric vehicles is through government subsidy, and I don't like to be in any business that relies on the government. Okay, so the different areas, there's basically 5 areas where you can play as an investor in the energy sector, okay? The most obvious one is the integrated oil companies, and we've spoken a lot about this on this channel. My 2 favorites, of course, are Exxon Mobil and Chevron. The other way to play, of course, is the oil services business, which we haven't talked about on this channel yet, but we're going to do that a little bit on this particular video. We're going to talk about that. The other area is oil and gas pipelines. I'm not going to talk about that in this particular video. You could do a whole video on that. I'm not going to talk about that area, but that's another area. Primarily limited partnerships and things of that nature. It can be interesting if you're looking for high dividend growth, but we're going to skip over that for this video in the interest of time. Another area is the ETFs. If you don't want to spend time analyzing specific companies, you can certainly pick from a vast variety of ETFs, and this is one of the great innovations over the last 25 years, that you can invest in the oil services industry. You can invest in oil as a pure play, the commodity, and you can invest in integrated oil companies through these ETFs without actually picking a company and doing the research. And then, of course, the last way is just investing directly in the commodity or commodities. Now, the way you can do this is for more advanced traders, of course, you can invest in futures or trade futures. You can trade options on futures, okay, which is, perhaps a less risky way to do it. And then you can, again, go with the ETFs and invest in oil ETFs, and there's a tremendous variety of these types of ETFs that you can invest in. So for the purpose of this video, in the interest of time, we're not going to talk about futures or options. You could do a whole video on that, and that's for only advanced traders. I would not recommend that for certainly novice investors. And I'm not going to talk about specifically the pipelines, as I mentioned before, because again, that is an area that is a specialty unto itself. So we're just going to talk about the three main areas that I look at in this particular video. Now, if you've been watching this channel, and even if you're new to the channel, I have spent months and months and months talking about the integrated oil companies way back to October of 2020, where I first recommended Exxon Mobil and Chevron as great ways to play the reopening play, as being a sector that was very, very badly beaten up in the pandemic. And at the time I recommended Exxon, and I'll put some of these videos in the description, and you'll see some of the recommendations above. When I first recommended Exxon, it was selling for $33 a share, and the dividend yield was 10.4%. Okay? Since that time, it basically, as of a few weeks ago, almost doubled. It got up to 65. And that, since it was a 4-month period, it represented almost a 300% annualized rate of return, which was quite remarkable and amazing. But of course, the question is, a lot of these stocks related to the energy industry were beaten up badly due to the pandemic. But where are we now, and how can we play the energy business at this point in time, which is what we're going to talk about further in this video. Now, before we really get into it, let's just summarize a couple of the things that I've said in the past about why I think the oil and gas business is a good place to be for a reopening play, and why I think actually it is the ultimate reopening play. Okay, rule number one: the devastation in the oil and gas industry due to the pandemic. Okay, when the pandemic came in, there was a dramatic drop in the demand for oil and gas, and this was due to the shutdowns. During this time, an unbelievable amount of companies went out of business in the sector. Okay, a total of at least 161 oil and gas exploration companies and oil and gas services companies went out of business during this time. This is probably one of the worst downturns that there's ever been. You'd have to go back to the early 80s, late 70s, early 80s to see this kind of devastation. So what does this do? This leaves a hole, so to speak, in the supply of oil and gas. So that is my first reason why I think oil and gas is going up this year and next year, is because of the lack of providers in the business relative to before the pandemic. That's reason number one. Reason number two: the vaccine is coming in, right? And while the vaccine is coming in, everything is opening up in the economy, and you're seeing demand not only increase, but skyrocket. And when people start flying again, and when people start driving again, demand for oil is going to go through the roof. And couple that with what I said previously, the lack of supply, or the diminished supply, you're going to have a supply imbalance, a gap that is going to make owning oil and gas extremely profitable. And the last reason, which really saddens me, and it's very upsetting to me, but it's a fact, is the political environment. Now, I don't have to remind you that Joe Biden, one of the first things he did when he came into office was an executive order to basically kill the XL pipeline. And that destroyed something like 40,000 jobs, like immediately. And virtually everything he has done with respect to the executive orders and also the proposed legislation is intended to shut down oil and gas supply and capacity and encourage alternative energy. Okay, now we can sit here and argue about global warming and all of this stuff, and that's really not the focus of this particular video. But what these, I think, very wrong-minded policies are going to do is they're going to further lessen the supply of oil and gas to the market at a time when demand is literally going to skyrocket. So this puts us, if we are investing in the oil and gas business, because oil and gas is not going away, guys, okay? It's not going away. Contrary to what the politicians and Kamala Harris will tell you, it's not going away, okay? It is going to be a major part of our lives for the foreseeable future, and probably for my life and most of the lives of the people that are watching this video. It's going to be a very important factor to maintaining our lifestyle and this energy-rich lifestyle that we've grown accustomed to and have grown to love so much. So as further evidence and sort of further confirmation of my feelings on this issue, there is a stock analyst called Tom Lee, very smart guy. He used to be one of the top analysts at JP Morgan, which is one of my old firms. So I had a bit of camaraderie there with him, although I didn't know him when I was at the firm. But this guy has literally been right on the market for the last 3 years at least. His market calls have been incredible. And so I wanted to play you a clip of him on CNBC where he addresses the energy market, and then I'll come back and make a couple comments. Okay? Here it is.
Tom, it's Tim. Sorry, my question for you is around some of the cyclical sectors. I think you've talked about energy. I know you like oil services. Is this a structural call, or is this a technical call in terms of underweight dynamics and really where the rotation in this market is going?
It's a bit of both. I think what people are sort of overlooking is energy has a lot of positive characteristics. One is that there is a pretty steep decline in supply coming because there's been so little or non-existent capital investment. So production's going to slow. We have yet to see the inflection of demand coming from jet fuel, especially business travel. And when that comes on later in the year, that's going to really tighten the market. And of course, it adjusts through higher price. And that's going to raise also the umbrella around EV and battery. And as you know, as EV mandates go up, it's going to raise the umbrella for oil prices. And then for the stocks, they're almost completely unowned. Most of our clients have zero weights in energy, but energy just produced a 30% gain in the first quarter. In the history of the S&P since 1920, that's only happened 7 times, where a sector rose 30% in the first quarter, and 100% of the time, so 7 out of 7 times, that sector continued to actually rise through year end. The median is 12%. But if you take out technology in 1987, it's more like 15 to 20%. So energy might still have 20% relative performance to the S&P into year end, and that would take its total return to, potentially 70% this year. So I think there's still a lot of upside.
Okay, so I think what he is saying really confirms what I've been saying for months and months and months now. When people start flying on planes, driving cars, when the economy completely opens up, oil's going to go through the roof. It's already at 60. It was as low as people were paying to take it at one point during the pandemic, if you remember. Now it's at $60. I think it's going higher from here, and I've stated several times that I think it could go within a year as high as $100. Okay, that's just my opinion. Don't bet your entire future on that that opinion, but that's what I think. Okay. All right, so now what I'd like to do is I'd like to go to my trading account, and I'm going to take a look at these 3 various areas and some of the major players in the area, and then I'm going to make some recommendations to you on how specifically to play this exciting and still very undervalued market. Okay, so here we are in my trading account, and I've got Exxon Mobil teed up here. So what I'm going to do in this section is I'm going to go through some of the stocks that I've recommended. We're going to look at what they've done since I recommended them in the integrated oil companies. I'm going to look at the oil service companies, and then we're going to take a look at some ETFs. Okay, now I don't have time on this video to dig into the financials as I did on Exxon and Chevron, and I'll put those specific videos in the down below in the description, and you can take a look at them because I went into depth on their financial strength and how I proved to myself and to you, hopefully, that the dividend is safe and the dividend will be paid. So I'm not going to do that on this. I'm just going to kind of blast through a lot of information relatively quickly. Okay. So Exxon Mobil. Take a look here. I just want to. It's currently $56 a share, which is down from 65 a few weeks ago. Let's just take a look at the historical chart, and then I'll do the same for Chevron. All right. So here we have the one-year chart. You can see when I recommended it was down here at $33 and change. It was right about here, late in October. It shot up here to 65, and as I said, now it's down to 56 and change. Okay, so that was a tremendous move, and of course, the reason I recommended it at the time, and I bought all the way up, was that at the time I originally recommended it, it was trading with a 10.4% dividend. Now the dividend is, let's take a look at it real quickly. Now the dividend is 6.15%. Okay, you know, not what it once was, but you know, if you can see, if you look at the, let's go back to here for a second. This will be the same for Chevron. If you go to the 5-year chart, for example, it's still way below where it was years before. Okay, and you know, as I've stated, when the economy improves, we're going to, you know, improves and gets back to full throttle. You're going to see that stock go up. There could be another 40% in the stock from here. Okay, let's just take a quick look at Chevron, and you'll see a similar fact pattern. Chevron, it's now at 103 and change. Let's take a look at it historically. You know, you see similarly, I recommended it the end of October. Right in here, it was trading at, I think, 72, 73. Now it's at 103, right? So that's, you know, 30-40% increase. Traded as high as 111 up here. So that's quite remarkable. And again, if you look at the 5-year, you know, it's in and around 100, but it was 120, 140, you know, in and around there. Okay? So for the integrated oil and gas companies, which I really believe is one of the best ways to play this, my top picks are still Chevron and Exxon Mobil. And you know, if you saw my past videos, I went with Exxon simply because at the time I made the recommendation, Wall Street favored Chevron, Exxon was more disfavored, and that's why Exxon had a dividend of 10.4%, and Chevron at that time had a dividend of about 7.2%. So both great companies, both a great way to play the turnaround. I just thought that there was more upside in Exxon, and it turned out to be true. Okay, Chevron went up about 35-40%. Exxon almost doubled. All right. Okay, so let's keep moving here. Let's look now at the oil and gas services sector. And I just randomly picked 3 major companies. All right. And this one, of course, is Schlumberger. Okay, so you can see similar pattern in all of these. You'll see if you look at the historical quote here. You know, you can see that we don't look at the 5-year. Let's look at the 1-year. you can see in that same time frame, right, it sold as low as 15, 14-ish. Now it's at 27.50. Okay? So a dramatic rise. Okay? Very beaten up sector. But if you're interested in playing this sector, and of course this sector is the sector that in essence supports the oil and gas exploration business. And if you look at this description, I'll just read it briefly. 𝐦𝐨𝐬𝐬 provides technology for reservoir characterization, drilling, production, and processing to the oil and gas industry. The company's segments including reservoir characterization group, drilling group, production group, Cameron Group, not sure what that is. Reservoir characterization group consists of principal technologies involving in finding and defining hydrocarbon resources, so that helps in the exploration. The drilling group consists of principal technologies involved in the drilling and positioning of oil and gas wells. The production group consists of principal technologies involved in the lifetime production of oil and gas reservoirs, including well services, completions, artificial lift, integrated production services, etc., etc. Okay, so they basically support with technologies and services the oil and gas exploration business. So as a result, they rise and fall with the fortunes of oil and gas. Let's just really quickly take a look at Halliburton, which is another one. That's a hard one, right? And again, the mind and the mouth are not working together. 𝐦𝐨𝐴. I didn't realize how difficult that was to pronounce. Maybe for a normal person it's not difficult, who knows. But today, in this moment, but let's look at Halliburton. So Halliburton, similar pattern, right? This October-November time frame down to incredibly low levels, just total devastation in the business. $11 and change. Now it's up to $21. So basically doubled. Okay. And then let's take a quick look here at the last one, which is Baker Hughes. That's easier to pronounce. BKR. And you can see, wow, this one, insane. This was down at the low point, again, 12, and now it's up to 20. So, I mean, almost an identical pattern on these three major oil services companies. Now, I will say that what I did on this was, in preparing for the video, I did look at their balance sheets, their income statements, and cash flow. As you would imagine, it's pretty ugly. They're in and around 45% leveraged, which is not horrible, but they've all basically, for the most part, lost money over the last 5 years. And however, they are cash flow positive, which is encouraging. That is cash flow positive today. Although on an income basis, a net income basis, they are all losing money. Okay? So keep that in mind. I think there's further upside in this sector. However, I still prefer the integrated oil companies because to me it's more of a pure play on the rise in oil and the reopening play. And I can understand that better. I don't know enough about these oil services companies. I would have to dig into them and do a complete video to really get a handle on that. And if that's of interest to you subscribers, feel free to mention that in the comments below, and I'll do a whole video on the oil services business if that's of interest. Okay, so one of the great things that I wanted to talk to you about a little bit is the ETFs. Okay, now, you can go through and you can study these things, and you can look at different companies, and you can look at balance sheets, and you can You can really dig in. You know, if you have a background in that, I was in investment banking, so I feel very comfortable looking at financial statements. Maybe I'll do a video on how to look at financial statements and what to look for when you're investing. That might be a good idea that I just thought of now. But one of the wonderful things that's happened in investing over the last 25 years is ETFs. So one thing I wanted to do as a way for you to play this market, if you don't want to dig into individual stocks, it's a perfectly fine way to play it. In fact, in many ways, it's a great way to play it. So there are three ETFs that I just wanted to look at briefly here and recommend that you delve into more. And you can and should do your own research. There's tons of opportunities and tons of examples of ETFs that you can use, but we'll just take a look at a couple here. This is the Energy Spider. Its symbol is XLE. This is a generalized ETF that where you can play basically the entire energy sector. Okay, and I believe there is a mix. Let's look down here. Yeah, I believe that there is a mix. Yes, there's a mix of oil and gas companies, drillers, service businesses, pure plays, all kinds of things in this. And you can see, if you look at the historical chart, look familiar? It basically mirrors what we've been looking at, right? Low of 27. At the time I was recommending Exxon and Chevron, it's gone up to 27. It's gone up to 48. So it's almost doubled. And up here, it did double. So you can see how closely these ETFs track, and you can just say to yourself, I'm going to play the energy market, you know, the broad energy market, and that way I don't have to pick individual stocks. Great way to go, especially if you're not a securities and financial analysis geek like me. Great way to go, okay? Let's take a look at another one. Go to the snapshot. This one, if you want to just play the oil services sector, there is a wonderful ETF here for you. Okay, here it is. The VanEck Vectors ETF Trust. The VanEck Vectors Oil Services ETF. And what this does is, as the name suggests, is it assembled a portfolio basically in a trust that represents essentially the oil and gas services industry. You know, you can see Schlumberger, Halliburton, Baker Hughes, all the things that we were looking at and more. But you can see they have the three biggest in there. So you're basically tracking the oil services industry. And if we look at the historical chart, you know, this looks familiar. We have, you know, a low of around 97, currently trading 188. Okay, peaked the same time everything else did, and now it's down. Okay, so all of these are down, and they have a ways to go. Okay, so the last one I wanted to talk about is, let's say you just say to yourself, you know, I don't want to invest in companies. I don't want to try to figure out if ETFs are going to work, or, you know, whatever your thought might be. I just want to bet that oil is going to rise. Say you think that oil is going to reach 100 as a reopening play. This is an ETF that I guess Barclays is behind, that is basically just a pure play on oil. Okay, so you're basically investing purely in the commodity through an ETF, or ETN as they call it. And you know, again, you can see a similar pattern here. This is really the easiest. There are other oil ETFs, depending on their strat. You can look into what specifically their strategy is. Are they, investing directly in oil? Are they investing in futures? How are they doing it? They do it different ways, but this is an example of one that does represent basically oil. And you see a low here of November 2020, and it's currently, let's see, it hit a low of around 10. Now it's at 17. So, it's almost doubled. If it was 20, it would have doubled. Again, following a similar pattern. The thing I like, again, about the integrated oil companies is the nice dividend they pay. And that, to me, is very important. Okay, so let's go back to the main screen, and I have a couple things I want to say and a couple recommendations. So let's go there right now. Hey, so I hope you enjoyed that. I know I did. So, again, when I look at this energy sector, when I look at this as a reopening play, I think that even though it's had a tremendous run since I first started recommending these plays, literally at the bottom of the market, when Exxon was selling at 33, even though it's had a tremendous run up, as Tom Lee was saying, it's still got farther to go, and we have not yet seen the full benefit of the reopening play and the rise in usage coupled with the decline in supply that is going to cause the mother of all supply imbalances. And so I think that is something that is very, very interesting. So whether you want to play this in the integrated oil companies, which is the way I have chosen, largely because of the nice dividend. I love getting paid a dividend while I'm waiting. Or if you want to focus on the services sector, or if you want to, go into oil directly, or you want to play the ETFs, they're all good ways to play this turnaround situation. And the market, in my view, has got more to go. And so you can use the sell-off in the last 2 weeks as a very opportune time to jump in and ride this out. You have to be patient because it's going to take maybe a year or two. But I think if you do, you're going to be very happy you did, and I'm going to be right along there with you. Well, I hope you enjoyed this presentation. I enjoyed making this video. And all I can say is if you got value out of it, please smash the like button. And please subscribe. And hit the bell so you can be on board for future presentations, which will be coming your way very soon.